Good morning, everybody. How are we doing? Morning. Oh, where's my chat gone? Morning, Amy, Church, Senji, Evil, SG, Callum, Monkey, Nasuke. That's a new one. Not pronounced that one before. How are we doing? So, I'm going to go through the news this morning. Have a look at the Japanese rates, trade the Dax, trade the FTSE, and just have a look at the week, basically, and see how everything's gone. So, Japanese, start off with obviously the big news. Japanese interest rates, not really anything exciting. So if we look at financial juice is probably the best thing. Other overnight news, basically, not a lot. Where does it start? Let's go back. So BOJ will conduct JGB purchases in accordance with decision, blah, 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 usual stuff. Plan for bond buying will be discussed at the upcoming meeting. We know that they've reduced their bond purchases. So I suspect that is going to that's probably not the right thing to do. We need to buy more because the intervention didn't work. Rate decision was a 0.1, forecast is a 0.1. Previously 0.1. So they've basically done one interest rate change and that's it. So basically it's just nothing. Moderate recovery, usual stuff. So there's no, just scanning through it this morning when I woke up, there's nothing particularly interesting in here that gives us any indication as to what the Bank of Japan are going to be doing moving forward. Which is bad. Little bit of a bounce in the Euro CPI there as well. Ueda is actually speaking at the moment, so we might get a little bit more forward guidance coming here. But as you can see, we've got a few ADRs on these yen pairs, and it's negative reaction initially from the market to it. So still no idea what they're going to do with this Japanese yen. I was expecting a decent rate increase, and I think a lot of market participants were, which is why we've had this sort of negative reaction to the yen, because I think they priced in ever so slightly some strength showing from the yen, and they didn't get it this morning. So we've got a negative move against it. Whether or not that holds today, we'll wait and see. As you can see, New Zealand yen just tapped straight into yesterday's high and is rejecting at the moment. Pound yen just about tapped ADR. Euro yen didn't quite even get to ADR. Swiss yen 150. Swissy always gets more of everything because everybody puts the money into the Swissy when they don't know what they're doing with it. And obviously just about got it on the CAD yen as well. So Aussie yen, pretty much the same as New Zealand, just tapped yesterday's high, the previous week's high, and is rejecting a little bit. So overall market, not sure what to do with this either. So for the moment, for the time being, I'm still going to stay out of the yen because I don't think it's going to move a lot because there's just so much uncertainty with it. Market do not want to buy it. They do not want to sell it. They know that if the US dollar goes onto a rally, something has to be done. But what will be done and how it will be done, I don't think anybody is really clear on at all at the moment with anything to do with monetary policy on it. So your guess is as good as mine. I was hoping for some clarity this morning. But we obviously haven't got it. So it's a case of yen probably something along these lines for the next 2, 3, 4 weeks until we get back to a new rate announcement. Obviously, the Japanese's hand will be forced when the US CPI numbers come out next, because if they're a bounce, we're going to rally the US dollar. If they're a drop, we're going to get that interest rate coming down and the US will drop. If it rallies, the Japanese are going to be in the same boat as that. And the question is, can they intervene again? We just don't know. So it's just too dangerous to trade at the moment. You want to long it because of positive swap. You want to short it because it's at the all-time highs and it's becoming uneconomical to run the country. What do you do? So it's just, if you get into it, obviously there's a lot of RSI extensions that are working. RSI is working beautifully on it at the moment. Yeah. But will it continue to do that? Will the market just go back into grind mode and start grinding the yen back out again? If that's the case, you're going to get stuck in similar situations to where I got stuck here. But we don't know what the new intervention point is, if there is one. So very tricky. Away to speaking at the moment, but I don't think this is saying an awful lot. Short-term interest rate at July's meeting, considering a bond purchase reduction. Again, look, so they are considering further reductions in bond purchase, which means not propping the yen up with overseas US bonds, which again is weakened. That will weaken the yen. They need to increase interest rates if they're going to reduce bond purchase. They're not doing it. What they've done is not changed interest rates and reduce bond purchases. That just weakens the yen, surely. But I don't know. It's weird. So, unfortunately, no guidance there really, or any help from Bank of Japan this morning as to what they're going to do. If you're short in it, obviously it's gone against you. But whether it continues today, I don't know. We've got Michigan this afternoon. US dollar obviously is just, again, same thing. US dollar's flat as a pancake at the moment, which is great because it's ranging beautifully. So University of Michigan this afternoon could rally at either direction. I think we'll probably see pretty much a stable dollar this morning, but we'll see. So no help there, really. So afternoon, University of Michigan at 3 o'clock. We've got Lagarde speaking this evening, but I doubt there'll be anything of interest in that because we've had all the real big news on the ECB over the last few weeks. So next week is interest rate week, big one. So looking ahead, we'll obviously have a look at this on Monday in more detail. But next week, we've got the Aussie rates. We've got the Swiss rates and we've got the pound rates, and it's also PMI week. So very, very big news week next week. That shouldn't change. That could do absolutely anything. They won't tell us. It'll happen. It'll go mental if it does. That we have an outside chance of a shock drop. But more likely staying the same, and then Bailey coming out and saying, yeah, next month. So that will weaken the pound next week. So bit of a mixed week this week and next week. Very difficult to call. So we'll see what happens with the... he's still talking this morning. Dax... we've got a big drop in the FTSE ahead of the market open this morning. DAX also dropping a little, but not a massive amount. So pre-market ranges today might be tricky. We'll see. We've got just over 2 minutes until the open. Yesterday, not a bad day yesterday. Not a great day, but not a bad day. So did 1.4% yesterday. Banked 0.47 this morning. Really annoyed about the euro pound. I should have taken this exit yesterday. So frustrating. I had the exit here yesterday, $800, but I didn't take it. So obviously I had to take a drawdown control on it yesterday because it didn't give me an option to get back out. So I'm still holding for the gap fill. So far this morning, we've rejected yesterday's low twice. So Asian session rejected it. We're rejecting pre-London Open. So I'm hoping we will come back up and retest this propulsion and start to form a range down here. And if that is the case, obviously I will be getting out up there this time, just in case we can't get back to that gap. France, obviously, we've got the all the political problems and things going on at the moment. So, and obviously with the rate drop on the euro, fundamentally, really, it is a short, but that is probably going to switch short next week as well. So there's a good chance we'll get a pop on it next week. So just holding it at the minute. The only other thing I'm in at the moment is pound CAD, which is coming down nicely. If we can get an ADR on that today, I'll have an exit on that position. And then I'll do a little bit of DD control a little bit further down. But that's all I've got on at the moment. Everything else has been beautiful. Straight in, straight out. Was 9% down at the beginning of the month, back to minus 1.4. So month is going okay. Right, let's watch the Dax at the open. And the FTSE, we got 20 seconds. Morning, everybody else. Twig, Von Rip, Gregors, JC, Danny, Chuck, Steve, morning. $10 seconds to open. Should get a trade on pre-market on DAX. FTSE, not so much. Oh, yeah. No, it's just taking the 5-minute pre-market range. Okay, big, strong move out of the DAX this morning out the gates. Straight into a propulsion gap, which isn't going to help, is it? That looks like a hedge to me this morning, but we'll see. We've got two lovely big propulsion targets to the upside on the DAX. We are in bear for the last week or so. So pull back potentially today. We will see. That's 3R, that propulsion target. No break on the FTSE so far. That's dead as a doornail. Look. Where does that saying come from? Dead as a doornail. When has a doornail ever been alive? Some of these sayings in the UK are just weird, aren't they? Dead as a doornail. Weird. I wonder if Bailey might go early. Yeah. I think there's a good possibility. Morning, Neo. So it's going to be. I don't know what the percentage chances are. You never do. A rate hike in July is naturally possible depending on data. Thanks, Oeda. It's helpful. Yeah, I mean, we came down like really fast. Inflation came down way faster than we were anticipating, obviously, on the pound. Unemployment is starting to creep up as well. So there's, GDP is doing good. Yeah, so that's going in the right direction. That's going in the wrong direction. That is virtually at target. There is a lot of pressure to reduce that by 0.25% now because we just want to get on top of unemployment as well. So, yeah, I think there's a good chance it will come down next week, but it's not forecast. Bailey has never, ever said July. They have said August. And we're in, I think now, we haven't heard from him since the inflation figures really in any detail. So I think now he'll be coming out and saying July, but the government will be pushing for this. The election is a couple of weeks away. If they can drop interest rates before the elections, it will really help the Conservatives. Not that they've got a chance in hell of winning, but it will help their case a lot. So we will see. Dax is dead. So there was one order came in, one big push, and that was it. The market is totally dead this morning. Look at the FTSE. No volume at all, anywhere. Right, we'll give that 5 or 10 minutes because apparently ain't doing anything at the moment. Quick update on the prop account. I'm up to 2%, bank 0.64 yesterday. I've got some stuff in profit. Pound CAD coming down nicely. Euro New Zealand's in profit. In fact, I've got $1,000 there, haven't I? What's that euro going to do today? Might leave that open. Pound CAD. Might just get that in the bank, the pound CAD. Easy money. 0.5% in today. I don't think there's anything to take today, is there? Swiss yen, euro odd. Swiss yen. Yeah, got stopped out on Swiss yen. Do I want to short against the yen again? I don't think I do today. Euro New Zealand. Got that long already. And euro odd. Got that long, which is overexposed. I'm going to take euro New Zealand off because I've just realized I've overexposed on the Australasian pairs. So put that in the bank. 0.8. If the euro does rally against the Australian and the New Zealand, because Aussie and New Zealand obviously finished trading now in Asia, so there's no point in being exposed on both of those. If the euro drops today, I don't want to go into drawdown on both, so I might as well just take the money. And if it rallies, obviously the euro odd will go into profit anyway. Okay, so we got an inside bar at the open on the FTSE. Dead. Dead. Totally dead. Just nothing this morning, is there? I think it's going to be one of those mornings. If I can get target on the FTSE, that's going to hedge and just use one to pay the other, because be lucky to get anything out of this morning. It's just not moving. Nail is buried in the wood. Yeah, that would make sense. Dead as a doornail. Still doesn't make sense. Kind of makes sense, but not really. Morning, Eri. Morning, Virginia. Morning, Michael. Right, so we'll have a look at FX. So today's ADR opportunities for London are pretty much yen, obviously. So it's not the strongest move in the world. Obviously, money gets pushed into the Swiss franc when there is uncertainty. So the Swiss yen has obviously been the biggest rally because they've pulled money out of the yen while they're deciding where to put it. It's gone into the Swiss franc. Swiss franc's kind of like your holding account. So Swiss yen is obviously the biggest ADR today. The others are the CAD yen. So CAD yen, obviously, we're up at ADR. Swiss yen obviously is much bigger, 150 ADR. Pound yen, again, just hit ADR, but that's come off, and same with the US yen. So the question is this just a knee-jerk reaction to them not increasing interest rates, which was an expected move? And are we going to return? Because they're now thinking, well, 0.1% wouldn't have made a lot of difference anyway. Or what's going to happen? I don't know. So I'm not really interested in taking opportunities on these. If you do want to trade them, though, as you can see, it's looking pretty bullish. Yeah, we've got a long wick to the downside there as the market tried to push back down. And we've got another rejection just gone in. So that is a propulsion gap. It's in white because we've got a propulsion gap inside a propulsion gap. But they are buying this back up again. So I'm not convinced it's going to fly, but again, not quite sure it's going to come back down to origin either. So those are your your ADRs today. Not really anything exciting to look at. RSIs, the 4 hours are all reset. Obviously, that's why the P&L's all green this week, because everything's just played out beautifully. Euro US dollar, I've just taken an entry, or I haven't, the EA has, long. So that's H1M5 mean reversion. So H1 RSI extension, 5 minute. MA cross. And this is the beauty of the position trader EA using this as an entry signal instead of the market reversal alert. This is an unconfirmed entry, obviously. So once we cross there, we know that the last batch of bulls has actually taken control back of the market. So that's your stronger signal. However, you can see the distance difference. Quite a distance difference when you use an MA versus the MRA. In this case, it's not actually that much, is it? But you had that big drop down. But yeah, so in long Euro US. I'm just going to stick my target up at that high for the moment. Just it's not going to get hit. You're not going to do 200 ADR today, not even on Michigan. But that's a bit close. So I'm just going to see if there's an ADR move on Michigan. And if there is, I'll probably take it off somewhere up here today if it gets there. But looking for some Euro strength today. So those are your RSIs today. Swiss yen, obviously, is an RSI extension because it's had the 150 ADR rally to the upside. We've got Euro CAD also extended to the downside. So that's forming a nice divergence there. Bullish. However, the Euro is bearish, but then so is the CAD because they've just dropped their rates. Euro Swiss. So we've had a little bit of money coming into the Swiss franc this morning, obviously, because they've put it in there because of the yen. But that is extended and embedded. So that's a really good looking long back up into propulsion there. We did get the gap fill done, which obviously is sold back off again. So yesterday, obviously, was a big down day on the Euro. Couple of hours, they just sold off dramatically during New York. So with that, obviously the Euro is now bearish, but look at that extension. Absolutely huge. We'll be getting a pullback on that to some degree. Whether it gets that far, I don't know, because that's over 50% retracement. But if you long it from here on the next reversal, you've got a good chance of getting at least, a flag on it. Drop down M5, your reversal alert. So MA is holding at the moment, but your reversal alert will be up there, which is 90, basically 96. Pretty much big round number 96. So your entry would be there, 125 ADR to fill the propulsion gap. And Euro US dollar, which I've just taken. So that's an RSI extension long. Could have sworn I had Euro US dollar set short only, or did I leave that one as both? No, I left that one as both, yeah. So Euro US dollar, all other Euro pairs, apart from Euro pound at the moment because I've already got my long on, all other pairs I've got set short only on the Euro, apart from the US dollar, because we will start to see some weakness coming into that US at some point shortly, which obviously will give the Euro an opportunity to rally. But being obviously the two main currencies and highly liquid, you get a lot of movement on this because these two pairs have news constantly. So you're constantly getting the push and the pull on them. So it's unusual. I don't think I've ever been in a squeeze on the Euro US dollar from memory. Not a big one anyway, because it's so liquid. So it's the biggest traded currency on the planet. So you get a lot of push and pull, a lot of news events. So I don't really mind taking this in either direction. So much support and resistance all over the place all the time. So you're always going to get limit orders bouncing all over the place on it. So if you think about the vast majority of transactions throughout the world, US dollar is the main currency transacted internationally. Euro, huge services sector, and obviously with the pound we are in sync. So there's so much money goes through the Euro and the US. This is always on the move. So the market is constantly transacting in it, which obviously makes it move up and down. So I don't really have a problem trading either direction on that one, but every other euro I'm short, apart from the pound. So that's it. There's your RSIs this morning. Hedged on the Dax. So 350 locked in as a hedge, and short FTSE. So FTSE 1R is just above yesterday's low, 3R just above the low of the week. So should be able to get down there. That's ADR basically today. So the market's selling off quite hard. But that means the euro should be rallying on the plus side. Nope. We've got the euro coming down and the DAX coming down at the same time, which is unusual. Anybody got any other pairs they want to look at? Let me know. But there's not really much else to look at today. Condolences on to the Dornell family. Yeah, dead as a doornail. Got to look it up. The plants are all dead as a doornail. Its meaning is disputed, but most likely it refers to the costly metal nails hammered into the outer doors of the wealthy. Most people use much cheaper wooden pegs, which were clenched on the inside of the door and therefore were dead. What? That doesn't even make sense. Dates back to the 1300s. William Shakespeare, and in the 1500s by Charles Dickens. Phrase meaning that something is not alive, truly unequivocally deceased. Anyway, they're not dead as a doornail anymore, so we can forget it. They've livened up. They've come back to life. They're no longer dead. We can forget about that one. Swiss yen reached all-time highs today. Probably. Yeah, so this is the thing. This is constantly making new higher highs. Yeah, the intervention level. Intervention 2 is holding for the US and the CAD. Intervention 1 is holding for Euro Pound. Intervention 1 for the Australasian pairs and the Swissy, gone. Yeah, it's just it hasn't worked. That's what I mean. I don't. It's one of those weird situations where you can't see anything stopping this apart from a country going bankrupt. But it doesn't happen, does it? So what are these guys going to do when you get back here? 225 ADR. Let's say this afternoon, University of Michigan comes out as a massive positive, and we pop another ADR on this. Monday, we're half an ADR away from breaking all-time high, which the Japanese have said constantly, you will not pass this level, we will stop you. And they did. But if you look at financial juice for the last week, there's not been one here we go. I was just going to say, there's not been one mention of forex. Ueda says he won't comment on forex moves when asked if the yen's weakness might be reversed. So I was just going to say, for the last couple of weeks, we've had no mention of FX intervention. This morning, he's watching closely. So probably Monday or over the weekend, we will have undesirable FX moves are being watched very closely. It is not nice for you to be still weakening our yen. Please stop it or we will intervene in no uncertain terms. Is this the start of the next intervention talk? But the last one took weeks to happen. So we'll see. But this US dollar, if the US dollar doesn't break this intervention high from the previous month and comes back down again, there's no problem. If it does, they're going to be talking about what they're going to do. But can they do it? That's the question. We don't know, do we? We just don't know if they've got it in them anymore. Breakdown still happening. So it looks like we're going to test yesterday's low on the FTSE. Might just move down ever so slightly. Make a lot of difference, but no, the nail is bent over when it comes out the other side of the door. That's dead. Can never be used again, unlike other nails. Gotcha. That makes sense. It's like the nail when you try and hammer it into the wall and it bends. You can't use it. It's dead as a wall nail. I just made up a new saying. That makes sense. That makes sense. Right. We'll see if we can get any more movement on this FTSE this morning, but it's struggling. Starting to bottom out at the moment. Really need this euro to push against the pound today. Again, this euro pound, I should have taken this yesterday. It was only a couple of $100, but it was a wrong trade. I should have got out of it yesterday. And the euro pound on my account yesterday, I should have got out of as well. Big mistake that was yesterday. Annoying. Didn't get time to react, though. It happened very, very quick, the reversal. Like that candle put the nail in the coffin. I had a break-even exit from $800. No, there's nothing much I could do about that. And what I was expecting, which I said in the live room, was a pullback rally back up into there. Market decided otherwise. However, they just have failed at that low this morning, so might go from there, but we'll wait and see. I don't really want to be long on the euro. That's the trouble. I was in this just a bit too early. Right, that's all I've got for you this morning. There's not really a lot else to talk about today. I'm going to be doing some more analysis on other strategies today. So it's just a case of just babysitting these two this morning. God, I hope this doesn't hedge. If this hedges, it's going to ruin my week. We will see. Doesn't look particularly exciting. There's a nice 3-bar reversal going in at the moment on the FTSE. That's looking massively bullish all of a sudden. So we'll see if the propulsion gap at the open holds and they add back into the short. But other than that, don't know. So plan for next week. Next week, obviously, is Monday's dead. It's Empire State Manufacturing. That's all we've got. 1:30 doesn't tend to do anything really. Sometimes it does, but it doesn't really do a lot. Manufacturing isn't really affecting the interest rates at the moment. So, and that's what it's all about. Tuesday is when it all kicks off with the cash rate for the Australian. So we will get, I suspect, a big move on the Aussie and the New Zealand on Tuesday morning. Retail sales for the US on the afternoon on Tuesday. That's the biggie. So this number here, this CPI number for the pound next Wednesday, this is a day before we change our rates. If that comes out at 2%, unlikely, but it might come out as a 2.2. I think that is on the cards. If that comes out lower than forecast, that will put even more pressure on Bailey to actually do the rate. So I think for me at the moment, there's a 50-50 shot that we're going to go down to 5% on Thursday next week. The market hasn't factored this in. If you look at the pound, doesn't matter what you look at really, but if you look at the pound, before an interest rate drop, the market factors the interest rate drop in. So usually a couple of weeks before a forecast drop, you get a drop. So the market is positioning itself ready to continue that move. We haven't had that. So if that interest rate does come down on Thursday next week, that pound is going to go through the floor because they will not be factored in. They will not expect it, and they will dump pound fast. So you're going to find things like the yen and the Swiss will probably benefit from that movement as well. We've had a slight drop on New Zealand, Swiss franc sideways. Really, that drop is Swiss franc strength, not pound weakness. CAD obviously has been weak. So, there's an argument for a big move next week if that happens. But this number here, if that comes out lower than forecast, you're going to get a big move on Wednesday because the market will suddenly go, crap, we've missed the drop on the interest rate coming, and they will sell ready for the anticipation of Bailey dropping rates. If we get a lower number there, the market collapses on it and Bailey doesn't drop rates, it's going to completely undo that CPI number. So it's going to be a hectic couple of days for the pound Wednesday, Thursday. We got unemployment on Thursday as well for the US, and then we've got PMI day on Friday. So PMI is the sort of inflationary figure for purchasing managers, basically. So has price of manufacturing gone up? If so, that gets passed on to consumers. CPI. PMI feeds into CPI. CPI feeds into inflation, interest rates, etc. So that's an important, they're all important figures, the PMIs. So they have the power to move easily ADRs. So Friday's a manic day as well. So Tuesday, manic with the Aussie and New Zealand, possibly manic with the US. Wednesday, possibly manic with the pound, definitely manic with the Swiss and the pound, and possibly the US on Thursday, and nuts for everybody on Friday. So it's going to be a big week next week. Hopefully the market seems to be getting back to life a little bit, so we might get some more movement coming in. So yeah, looking pretty decent week next week. Okay, so we've rejected propulsion on the FTSE and the Dax, which is good. So they've added back into the sells. So we'll hopefully should break down from here. On RSI2, do you use a stop loss? Can do. Up to you. Yes, you can. No, you don't have to. Basically, the CPI strategy, the RSI2 strategy, you can trade it in a number of ways. I've tested using stops, not using stops. I've tested partial exits, full exits. I've tested end of day exits, opposite signal exits. I've tested everything. It doesn't matter. It all works. The purpose behind RSI2, and which is why it is so effective, is you are basically trading the relative strength of the last 2 days. The market finds it hard to do the same thing for 3 or 4 days on the trot. So if you get in when there's an RSI2 extension, it's usually after 2 down days, maybe 3 down days. The chances of a pullback are incredibly high. So one way that is very effective is using half an ADR TP. So you just get in, set a stop loss 2 or 3 ADR away, doesn't matter. Very, very rarely ever going to get hit. And you set half an ADR as a TP. It's a scalp. So it's an intraday scalp. You're in and out within the day. Yeah. Or you can use it as a position trade. So you get in. If the next day is a down day, fantastic. Let's add another one because now it's really stretched. If you look at RSI2 and the amount of time it spends embedded, not often at all. So you can use it in that respect with a stop loss. You can use a tight stop loss on it. Yeah. And go for that 2 days is now going to undo itself and go for a 3-4R return with a tight stop of half an ADR. That works. You can get into multiple positions within 3 ADR and then get out as soon as it becomes profitable. That works. I've tested everything. There's nothing much that doesn't work with it. It's almost the holy grail of indicators, the RSI. Why do you think I've been using it for the past 5 years and why everybody else goes, it's crap? The reason everybody says it's crap is because nobody's using it right. They're all using it as a stochastic. It doesn't work like a stochastic. It's nothing to do with stochastic. That's why everyone goes, what's the worst indicator on the planet? Relative strength. Funny, I've been making a fortune with it for 5 years. And people like Larry Connors basically made themselves millionaires with it. So did some of the turtles. Can't really prove it wrong, can you? But anyway. So yeah, there's many ways to use it. There's many strategies you can use it. You can use it on the 4-hour time frame. This is using the hourly time frame. No, sorry, this account. Where's my account shut? This account here, which I'll show you, is using the position trader EA. RSI2 strategy. When it decides to work. And you see the results there. Look, done 19% this month, sitting in profit. And it's basically trading RSI2 with position trader EA. But it's trading on the hourly chart. I've put the set file for this in the group in Telegram. But it's basically 1% risk. Distance between trades is 0.1 of an ADR. So every hour, if it's still extended, it just goes, I'll have another one, I'll have another one, I'll have another one. And I'm just looking to get out with 0.75% of a percent, 0.75 of an ADR of movement, basically. But if it moves half an ADR against, we shut the position completely. Get out. Jump ship. But it's brilliant. But this is, this is one way of trading it. There's so many ways to trade it. But this is what RSI2 is all about. And this chart is kind of a good one to look at because there's a couple of trades on it. Look, big push down entry. You could have exited there. You could have exited that day. Pushed down again. Yeah, took another entry there because it was 0.1 away. Exited there. RSI2 extension to the upside. Exited just now today. But it's about intraday movement. Yeah, if something pushes down, even if it does another down day, it usually pulls back before it does. Yeah, because they've got to get back to an area where they can find sellers. So that's basically the theory behind the strategy. But look at it. It does not. There's the occasion. Can't see that behind my head. There is the occasional instance where you get an embedded RSI2 like that, and you're going to lose money there. You're just going to lose money. It's just going to loss. If you use a stop loss. If you don't use a stop loss, it's just going to go in, out. But with a stop loss, the strategy has roughly 3 to 5% drawdown over a 5-10 year period. Without a stop loss, you will go into 15, 20% drawdowns, but the return is hundreds of thousands, or well, it depends on your account size. I'm testing on 50k accounts, but the strategy is there's millions of ways to trade it. But it's exactly the same as I teach. It's either position trading or stop loss, yeah, using ADR. And the key to it is ADR. We know the market moves within its average daily range. Everybody else is using pips. This is why everybody fails, because ADR changes all the time. If you look at ADR over a period of time, and you can do that yourself by putting the ATR indicator on the daily chart. Yeah. So, you cannot trade the same strategy there and there, right? This is 1 month. ADR was up here. So ADR was 199. Yeah. And within the same month, 2 weeks later, it was trading down at 120. Yeah. Nearly 50% of the range it had there. This is where everybody goes wrong. They're not adjusting everything based on what the thing is doing. With RSI2, you're in and out within a couple of days, 90% of the time. It's got an 83 to 89% strike rate, depending what instrument you're trading it on, the ways that I'm trading anyway. So, but it makes small profit. You just get out. Get out when there's money there. Don't get out when you get a 3R. Get out when there's money. If it goes green, take it. Because it's like elastic band. We're trying to get that snapback. But what the market often does, and you'll see it regularly, is it will push hard in one direction. The next day will also be a green day. Yeah? But it'll have a tail. That's your exit. It will push for 3 days in one direction. But within each of these days, there is a pullback. Green. Money. Take it. Brilliant. But there'll be more on it when I've done, when the guy that I'm working with, whose strategy it is. But I'm finding, RSI2, I've already published the RSI2 strategy for the position trader EA. Yeah. That's what's generated this. That exact set file has done 18.9% so far this month, using a 100% exit if it moves half an ADR. Running on the VPS. Test yourself. Test it. This yen is a stressed. I should have taken the advice and stayed out. You should have in this case, but many cases where I've said stuff that I think, it does the opposite. The reason I'm out is because I have no clue. If you've got half a clue where something should be going over a period of time, you've got half a chance of making money. I have absolutely no idea on the yen. It's the first time I've eliminated an FX instrument from my portfolio, I think ever. The Swiss franc at the moment and the yen at the moment are just too unpredictable. Which is going to hurt this month because it gives me, I've got so many less opportunities to trade. I'm down 10 pairs basically. I can't trade this month. So, 30% of my portfolio is gone because I can't trade it. But it's safer not to do it, in my opinion, at the minute. The market is uncertain. You can see, there's that famous phrase from Billions, isn't there? It's like he says, like, how sure are you about this? I'm not uncertain. At the moment, the market is very uncertain. Yeah. Look at this. We've been rallying for 12 months against the yen. Bang, bang. They shot 2 bullets. Yeah. Market ain't got a clue what to do now. Japanese haven't got a clue what to do. So you are literally trading a 50-50. And that 50-50 could go on for months in one direction, couldn't it? It's fine to trade with a stop. If you've got to limit your risk on it. But this thing, it's pushed up today. It could be back down here Monday. Michigan this afternoon could get negative numbers. You could be back down here. No idea. Absolutely no idea at the moment on it. What multiplier do you use for adding? I don't know. Have a look at the set file in Telegram. Um, 1.25. So basically, the strategy that's being run is RSI2 close 90-10. 1% risk over 1 ADR. Distance between trades 0.1, running on the hourly chart, and a 1.25 multiplier. Exit target. See, exit target, I can't remember what it was. So what it was that I posted was 0.75 and 0.75, yeah? Getting out at half an ADR with 100% of the lot size. But I'm actually managing my exits manually. So I'm checking the account on a regular basis. Yeah. So that 0.75 as an exit, what I have found when I'm actually trading it live is going for a 0.75 when you've got 3 positions on. So occasionally you'll get an instance where it will push really hard and then you'll accumulate for a day or so and it will move half an ADR or so. And what you'll find is you'll suddenly have 3 positions on, which are fairly close together. And to get out with 0.75 when it breaks that high is lunacy. Because if it breaks that high, it's going to go. So what I've decided to do is manually exit. So if it gets into one trade, I've decided to go for 1.25. I'll check it, like that one today, or the one we got on the screen right here, look. Aussie Swiss. So got in there, and I got out manually here. But it's not 1 point something% profit. It was 0.68% or something I closed it out at. But I decided to close it manually because we just hit a low. But if there was 4 positions on that, that would have been worth 5%. There's no point in getting out at 0.75. Get out with some serious percentage. And those are the days you can easily bank these 10% days. But your downside is limited. Downside is always going to be half an ADR, exit the position, 0.5%. So you get runs where it suddenly hammers you 0.5%, 0.5%, 0.5%, 0.5%, 0.5%, 0.5%. You look at the P&L and go, Jesus, I'm 3.5% down. But you've got one trade on which has got 4 positions in, and one spike makes you 5% in an hour. But the downside on that will be limited to 2%. But because you've got the size, and you know, with RSI2, as I say, we're doing that with price all the time. So those quick moves are really easy to profit from. This is running on not full auto, obviously, running on semi-auto, but done 20% this week. It's going to hit points in time where it is just going to hemorrhage. And it will. And I've seen that in the back tests. If you do the back tests with the set file that I posted, and do system parameter permutation tests on the exits, the percentage exits, and you'll see what happens. It will go through down periods. I haven't got the screenshots here, but it will. Your P&L will look like that. Yeah. You'll get these runs where you'll suddenly go, oh, this is a nightmare. But they are few and far between. It takes a news event, which is what the way these are caused is because you're trading the hourly charts, within one day, you can easily get 4 positions on. If the next day is a bull day, yeah, that has you take a loss. You take a fairly big loss, 2%, 3% loss. If the next day, because obviously RSI2 is extended there. If you get taken out, RSI2 is still extended, so it gets back in. So the times it gets the drawdown is when you get like 5 to 7 day pushes with very little pullback. And they tend to be caused by fundamental news events. So if it gets caught offside on fundamentals, it will hemorrhage. But equally, the very last trade, when it does that, it's usually able to get a 5 or 6% winner out of it because it's 7 days extended. So you get that. And you will be loaded on it because it will be RSI2 extended and it will be scaling into multiple positions. So when it comes down, you've got a big old lot size on that. And that tends to pay most of that back, which is why in the P&L, you'll see that and then pop. Because you've got a big lot size on, which usually gets at least half of it back, if not more. It's a great strategy. There's got to use a stop loss, really. If you don't use a stop loss with it, i.e. you don't have, obviously I've got drawdown control set to 100%, which is in effect a stop loss, isn't it? If you don't do that and you get a 9-day push against you, your drawdown's going to be not just uncomfortable, but like not sleeping. So just be careful, but test it yourself. Back test, as I always say. Do not take my word for anything. Go and back test it yourself. See what happens. Go, holy crap, that made 270 grand in 4 years. But it took 35% drawdown on one instrument. Am I that type of trader that can go 35% on one instrument to make $250,000 on a 50K account or half 100K account, whatever? If yes, that's what you do. If it's like, no way, you sort it by drawdown and go, right, what's the lowest drawdown? That only made 20 grand in 4 years. Oh, it only made 5 grand a year on one instrument. Crap. But it took 3% drawdown. Yeah, I like 3% drawdown. Yeah, your equity curve is going to be nowhere near as much fun, but you'll sleep and it'll be stable. Yeah, this is what I said. There's no right or wrong way to trade any strategy or any system or any way. Yeah, you have to find what you personally are comfortable with. my drawdown. Everyone says, when do you do your drawdown control? When I'm uncomfortable. I'm not going to be uncomfortable at the same point you're going to be uncomfortable. Some people will sit and go, Jesus Christ, 2.69%. Guys are loony. No, I'm not. I'm used to this. But I've been doing it for 5 years. Yeah, you've got different comfort levels, and you will have different comfort levels with drawdown. Some people will be cutting this constantly. That's fine. Do it. I have cut some, but I'm not going to cut it that often. Look, I've taken 1, 2, 3 drawdown controls on this, and I'm still in 2.7%. But if I hadn't have done that, I would have been in something like 4%. There's no right or wrong. You have to test, see what the results are, see what impact things have, and then go, right, I'll do it that way. But there's many ways to do it. But the guy that started me back off on the RSI2 strategy, who's my mate, who's asked me to do to build an EA for him to do testing, the way that he's trading it is with a hard stop and a hard TP, which is in effect what I've recreated with the position trader EA, because it uses 100% drawdown control after going against it, which is in effect an invisible stop loss. But I've also tested it without a stop, and it makes way more money, as you would expect, but it takes more heat. Don't know. Could you explain RSI2 for a dummy? It's RSI2, just 2, not 14. So it's literally this. So this is the RSI 14, 21. Yeah, you change that to a 2. Most people use close. You can use median. It really, really doesn't matter. Again, I've tested this. It doesn't matter. Yeah, that's what you get. So it's intraday swing. Yeah. And this is what I mean. Half an ADR as a TP, I'm giving away too many trade secrets, is very easily achievable. It moves half an ADR in a day. Look, we know about ADR, yeah? 58% of the time, the market stays within average daily range. So if 58% of the time, it's just popping up and down within its average daily range, if it's pushed down really hard, what's the chances of it doing at least half an ADR? It's way more than 58%. Way more. Really easy. But you're not going to make a fortune because you're getting out fast. Like this. I mean, look at this. That was your entry yesterday. This is on the hourly chart. I need to do this properly. Yeah. Right. There's no entry on this at the moment. But when this gets down to here, it's pushed down bloody hard. I mean, if you look at it, we just got Euro Swiss has hit its monthly range. It's the first monthly range just hit. Euro Swiss. So if you look at Euro, this is the wrong instrument to do this test on. Oh, that's the wrong RSI as well. Because I switched over to the daily chart. Right, there we go. So RSI2, look. So there's your entry on that day. Yeah, the next day it pushed down, get in again. The next day it pushed up, get out. You're not going to make a lot of money, but you're not going to lose anything, because when something pushes, it pulls. This one here, look, this is one of the examples of when you would lose some money. Pushed down, yeah. Next day, didn't do anything. Next day, pushed down. You would get in again. Yeah. Next day, it pushed back up again. Didn't give you an exit. It pushed down. So you would get in again. Same thing. Yeah. You get in again there. That one would have closed out. That one would have closed out. That one would have closed out. That one would have got you out in a profit. So you've taken 3 losses there. And then 1 win. But these types of moves are a lot less usual than that. Or that, or entry, that. This happens 90% of the 80 to 90% of the time. This happens Rarely. Isn't it? So it's just very, very simple. But it's a daily strategy. So don't expect to be getting trades every day. You know, look at this. There's 3 opportunities for entries at the moment. I've done 2.8% with it this week, literally just doing 1 trade a day, looking at it at the end of the day and going, is there any green? Yeah, stick it down there. Is there not any green? No? All right, I won't get in. That was an RSI2 extension. It was still extended, so I added 1. It went up yesterday and gave me an exit. Muggins didn't take it. If it pushes back up to there today, I exit. I've lost nothing. But I've got to stop. Yeah. So if it pushes down, I will lose. But you don't have to. Yeah, this thing's extended. It's going to pull back. There's no right or wrong. You go and test it yourself. It's very easy to test with the Position Trader EA. Run a system parameter permutation test and just test exits, percentage exits. Just change that. Change the drawdown, 100% drawdown. Change that to 50. Or change it from half an ADR to 1 ADR and run 10,000 system parameter permutation tests on hourly charts, 4-hourly charts. Test it all. It's fantastic. But there are even better ways as well to trade it, which is what I'm working on with this other guy. Not better, I say, different. Again, different ways to trade it. Not necessarily better. But for me, more risky because I like more risk. But obviously will be more drawdowny. I got in because I thought it was to break last intervention highs. Japan headed for bankruptcy, so I'm essentially getting against them going bankrupt, which felt fairly safe. I think you are still fairly safe, AZ, but it's not something anybody can really say has happened in the past. Again, it's another one of those words I hate, the unprecedented. This is unprecedented. Having an intervention fail in this manner. We've had interventions fail before, but interventions failing at 145, fine. 150, no problem. 160 failing, yeah, this is the market basically devaluing the yen beyond its extremes. 150 is the yen extreme. Yeah, previous intervention level. Yeah. Let's have another go. And this is just a failure. Look at it. It's a terrible failure. But the other side of the coin to this is you have to ask the question, Mr. US citizen, do you still want your iPhones? Do you want your Panasonic televisions? Yeah? Okay. Well, then if you don't help these guys power up their currency, they're going to stop making them because they go bankrupt. Oh, we'll buy it all from China. Who are we? Will you? You've just blocked all their mobile phones because you think they're spying on you. So where else are you going to get your technology from? You know, there's a relationship between Japan and US that also has to be maintained by the US, which is why the Japanese and the US talked about the intervention before it happened. To say, right, yeah, we understand. Yes, you're going to devalue our dollar. Go ahead. Yeah. But so what happens next? We don't know. We've never been here. It's a weird time, very weird time. But as I was taught the phrase, if in doubt, stay out. Morning, Pontevedra, Blue Trader. Today, a rain day. Yeah, it's a rain day here. It's a rain week here. Any chance of a student meetup? Nope. You can if you want. If you guys want to arrange something. But no. Don't forget, I don't make money out of this. Yeah, I'm not like Tom Hugard, who gets paid thousands and thousands to go and speak around the world. Yeah, I don't get paid for any of that stuff. I have wife and kids and family time. But if you want to pay me 10 grand to come and meet you all, I'm happy to do that, and I'll do a little talk. You need a little sideline. Someone please link the video on RSI2 strategy. There isn't one. Vitaly, why do you need a video? Guys, right? Get the position trader EA. Set it up on RSI2 on the daily time frame. Test. You don't need a video. Do it yourself. People got to stop wanting spoon feeding. Yeah, I'm not having a go at you, Vitaly, particularly, but if you want to make money in this industry, I'm sorry, you're going to need to put years in and do a bit of work to get there. Yeah, test it, run it, test it for 3 days. Test 10,000 system parameter permutation tests on every forex pair. Get the results and go, bloody hell, that's good. Pick one, use it, trade it. But don't take my word for it. Take your word for it. I never take anybody's word for it. Why do you think I've got in here? I've deleted them all, actually. This list in here was hundreds long of EAs that I've built and tested. Every single one of the EAs I've built and tested is someone else's strategy who's told me it's the holy grail. And I've turned around, built it, tested it, and gone, you're lying. Or it's bullshit. You're wrong. Whatever. But I basically do the due diligence on anything that I trade. I will never put a penny of my money into any strategy I haven't tested to death, because otherwise you're going to lose your money. Me, a guy sitting here on YouTube, is telling you this is the best thing since sliced bread. Don't take my word for it. I could be lying. I could be trying to sell you the position trader EA. You can buy it if you want to. You download the demo. Don't buy it though until you've downloaded the demo, tested it, and verified for yourself that it's worth buying for $99, because it's the best $99 you ever spend. But don't take my word for it. Test it. Yeah? Should never take anybody's word for anything. The 99% of this industry is full of con men, liars, and rip-off merchants. Don't believe anything anybody ever tells you. Every strategy I've ever been given, I have back-tested it myself and spent days, weeks, or months looking at something going, at the end of it, you waste a week, you waste a month of your life. I had one strategy using Bollinger Bands, which looked fantastic. The guy had beautiful results. I couldn't replicate any of it. I don't know where those results came from, but it wasn't the strategy he was showing, because I was trading it. I built systems, I built EAs to trade it automatically. I traded it manually. I visually back tested it. This guy was selling a course on it. And, you know, it's just, it looks, you can make anything look amazing. But if you can't make it work, it's useless to you. No. Test it. Google RSI2 strategy, right? I didn't come up with this. Larry Connors, a very well-known trader, came up with this decades ago. Yeah. One of the turtles used it. One of the guys that made millions used it. Right? People have been trading this for decades and it still works today. Warren Buffett trades a variation of it. Doesn't use an indicator, but if you put an indicator on a chart on the S&P 500 and look at how Warren Buffett scales into S&P pullbacks, you can do that with the RSI2. Why do you think Larry Connors used it? Why do you think it still works today? Because banks and institutions do the same thing every day. They've been doing it for over 100 years and they won't stop doing it, because as long as they need to make money, they will move the market up and down. As long as the market moves up and down, an indicator will move up and down. As long as the indicator moves up and down, it gives you a condition to enter a trade. Sometimes those trades will work. Don't take my word for it. Look at the chart. Yeah, you've got to do this yourself. You know, this is why you buy EAs. Yeah, I have so many people contact me and go, I've just bought your EA. What's the best settings? What do you want to trade? I don't know. What does it do? Sorry, you just bought it. What do you mean, what does it do? Have you not watched the video? No, is there a video on it? I'm sorry, you just spent money on something and you've not a bloody clue what it does. Yeah, you make money with it. What? The industry's full of people chasing the dream in that way. It doesn't work that way, as you see, yeah? We have months where things go horribly wrong, yeah? And if that's the first month you trade with something and it goes horribly wrong, you're going to just jump onto the next thing. And all you're going to end up doing is spending money after money after money after money. And all of a sudden, the $5,000 account you had to trade with has disappeared. And you've also spent $2,500 on crap. Well done, $7,500 in the hole. Now what do? Do anything until you've tested it in massive, intricate detail as well. Yeah. Set files. Anybody that publishes set files, and this is a really handy tip. I wish I'd have known this 10 years ago. But everything you see on the marketplace that for MQL5 that is somebody selling an EA, if they publish a signal and that signal is less than 2 months old, or they publish a set file on a regular basis for whatever product they're selling, it's a con. You don't know this because what you think is, oh, he's updating it all the time. He's giving me the latest settings. Yeah, the latest settings are curve fitted to what the market did for the last month. So when you put it in there and load that set file and press the button, it automatically makes profit. All a massive smoke and mirrors con that you don't realize until you've done it 5 or 10 times. And then you go, why is everything that makes money in the backtester never making money in the real world? That's why. Because these guys know exactly how to pull the wool over your eyes. Test it yourself, but test it over a long period of time. Yeah. If it hasn't worked for the last 4 years, it ain't going to work. Longer, ideally. Euro Swiss RSI extension really collapsing this euro. My euro pound is going to get hurt today. Why did I not get out of that? So annoying. I'd buy that other fella's version of the RSI strategy just to add a stop loss strategy to the portfolio. Why not use the position trader EA? I am. AZ, you're not thinking this through, right? Drawdown control. Set that to 100% at a percentage of ADR. Ta-da! Stop loss. Position Trader EA has a stop loss. It's called drawdown control. We normally use a percentage, but if you use all, that's a stop loss. Yeah, if you risk 1% over 1 ADR and you put 1% of your account in drawdown to close 100%, what is that? A stop loss at 100% of ADR. Because it's the same amount as you're risking. You can do all of this with the Position Trader EA. Just because it doesn't use a hard stop, that is exactly the same as a hard stop. It just isn't a line on the chart. It will get you out when it gets there. Same thing. But I would say eyeball your charts as well, because you will get intraday opportunities. And this is a thing that I have kind of explained to him. Backtesting gives you a very good idea of what is good and bad to use, what is going to affect drawdown, what is going to affect profitability, what is going to affect strike rate. What happens intraday, though, if you watch a visual backtest going past, you watch the backtester and watch something going past, and you watch a P&L, you will find there are many instances. This is a prime example, yeah? That was $800 in profit. If you had set a target of $1,000 in your strategy in an EA, in a test, that turns into a loss. That was $800 in profit. A normal human being, and I should have done this yesterday, and I was hovering over the button yesterday. I was that close to getting out because I thought that propulsion gap could hold. It did. A human being, if you watch your P&L 2-3 times a day, you will make totally different decisions to the EA. And a lot of them will be the right decision. Some of them will be the wrong one because it goes all the way up there. But at the end of the day, that is still profit. And again, you've got to do this. You've got to sit there. You've got to watch the strategy playing out. You've got to do the due diligence and, you know, stick stuff in here and watch it fly. That's minutes on the daily chart. Yeah. Yeah. So watch it trade. Watch what it does. It doesn't look great, does it? That made 16 grand over 4 years. Not a lot, is it? But you stick that in a portfolio with 28 others, it suddenly becomes an absolute money-making machine. And I don't even know if this is the right settings. I've no idea what's this set to do. But you watch it go past in here, and you look at the trades it's taken. Yeah, it went long there. Holy crap. What if it went long there and you went, oh, do you know what? I'm just going to leave that at break even. I'm going to go on holiday. Come back from your 2-week holiday. You've just made 25% on your account. Is it the right thing to do? The wrong thing to do? I don't know. Look at that. I think this is using a 2 ADR stop. Stopped out there just before that happened. If you'd position trade rather than using a stop, you'd have gone another entry there, which it did take, and it got out with profit. Another entry there, you'd be in 3 positions, and all of a sudden you'd be absolutely loaded. So you would look at it and go, yeah, I love the version with the stop loss, but the version without the stop loss, but you've got to visually see the thing playing out. You've got to do all the work to find out what is best for you, because you will not want the same thing as everybody else. Some people say to me, I want to make 5 grand a month. Why do you want to make 5 grand a month? Because it buys X or Y. Other people will say, I want to make 5 grand a year. Why do you want to make 5 grand a year? Because I want to buy a holiday for the family. Yeah. Making 5 grand a year with virtually any strategy on the planet, it's hard not to, if you do it right. If you suddenly go up to the daily charts and you use a good strategy, making 5 grand a year is very hard not to do. Even with a 5 or 10 grand account, you're only doubling it. 10% a month. Easy, isn't it? But the person that wants to make 5 grand a year and the person that wants to make 5 grand a month, they're going to use very different variations on any strategy that they see. And you won't know which one is right for you and your goals until you stick it in the tester, get a load of data and look at it. You've got to crunch data. Sorry, that was a bit of a rant, wasn't it? But DIY, you've got to do it yourself. You know, I haven't, who says I found the best way? Yeah, just a guy. Everybody else has got other ways of doing things. Took my euro pound at break even. Well done. Rub it in, Callum, why don't you? Yes, I was watching. I should tell you exactly what was going through my head yesterday, yeah? Because I came on here and I saw that and I was like, there's a bear candle in propulsion gap. And I saw that, and this was the start of the London session. I think this was 8 o'clock. 6 o'clock. This is when I woke up, right? So I woke up, first thing I do in the morning, open up my tablet, see what's going on. End of the Asian session, basically. I saw that and I was like, I'll give it another hour and see what happens, because I was sitting in $600 and something of profit. I thought we'd just broken the high. During Asia, they butted into it and popped it. Yeah. Next candle came in, spinning top. I was like, fantastic. Next candle came in, bull. That was the point. I looked at it and went, $800. Yeah, I should take this. This was market open. Market opened. Yeah, by the time I'd looked at the chart again, I was like, where's that P&L just gone? It's at break even. Holy crap, they've sold the propulsion gap, is what I said. Then it pushed up. That point, I was hovering over the button going, I need to take this. Then it pushed up. And I was watching it very close. I had this open on my terminal. Then it pushed up and I was like, fantastic. It's going back up. This is a pullback. Yeah. But that is the difference between me taking a $250 loss yesterday on that drawdown control and now being in 3% drawdown on the trade and banking $800. You're never, ever going to get the same result in a back test in the real world, because the real world is very, very different. You are affected by what you see on your P&L. Yesterday was the right decision to make. If I'd have closed that out yesterday and then it had gone like that and hit the gap fill in the afternoon, I'd be cross. As it turns out, I didn't get out and I'm still cross. Think back to the Bootcamp. What's one of those slides that says you get cross all the time in trading, because if it goes your way and it goes further than when you got out, it makes you cross because you've missed a load of profit and left it on the table. If it doesn't go your way and stops you out, you get cross because the market's taking your money. This industry is designed to make you angry. That you can't factor into an EA. It doesn't know any of this. Yeah. So if you let something go on full auto, fine. But full auto isn't the best way to do it. Yeah. Full auto on that would have got out somewhere up here. That's where a human being would have done it. Could have done it. Like Callum, who got out and made money, or at least got out with a break even. But that's the thing, isn't it? You got out, you've lost nothing. You've won nothing, but you've got out. I'm now stuck in 3% of drawdown on the possibility of the euro collapsing. But this afternoon on the University of Michigan, we could be back up here, in which case I shall be out. I only knew that. Right, I'm going to go now, and let's just see what's going on with the indices before I go. Out of the FTSE, I'm also out of the Dax short, getting into exit realms. So we have tapped yesterday's low. So I'm looking for a hedge exit on the Dax and out of the FTSE. So I'm 300 up on the FTSE, 420 down on the Dax at the moment. So ideal scenario will be bounce here. That will get out of that in profit. That is already made profit and locked in. It's due, innit? It needs to come up and test that. We'll see. If the Germans win today's game, does it spike the DAX? No. If the Germans... I was only joking, Callum, about rubbing it in. I don't mind. Yeah. If the Germans... So one of my friends is Scottish, and he said, can't wait till tomorrow's match. It's going to be a really good game of football. And I said to him, it's going to be a really good game of football for one team. One team's going to be playing football. The other team's going to be turning up so that the other team can play football against them. I'm pretty sure Germany's going to win. But I don't think it affects the DAX. First of all, the kickoff is after the DAX is closed. So it's not going to happen, is it? I think it is anyway. It's this evening, isn't it? Yeah, DAX will be shut, but no, it won't affect the DAX. The stock market doesn't rally because of a football match. Unless the football match has some economic impact in some way, shape or form, but I don't think so. You never know. Stranger things have happened. Right, I'm going to leave you with there. I'll be managing the DAX today. We've got a long way to drop. So there's no support resistance anywhere until we get down to roughly 150 ADR, top of that range. So that would be support downside and obviously monthly low. But I find it very hard to believe we're going to do a 175 ADR on a Friday afternoon. You never know. And FTSE, we got support, very strong support. That's ADR. So target is ADR to the downside. So FTSE, if it goes down to target, gets me out, makes more money. That pays for the DAX hedge. And then when the DAX pulls back, hopefully get out of that hedge with less loss than the profit on the FTSE today. But we'll see. At the moment, we seem to be a little bit stuck. Would be an interesting market if sport impacted it. Yeah, that would be. You can do that. I used to be, do you know, before I was a trader, I used to be a spread better on Betfair. So I used to make books on Betfair with a piece of software called BetAngel. which I think is probably still going today. It is. There you go, Betfair trading software. So I use this to trade on Betfair. It's ladder trading. It's exactly the same as trading a ladder. But yeah, sport is a really good thing. It works out to actually trade. You can trade sport on Betfair, and there's a lot of people doing it, but it is scalping. You're better off really trading futures, but yeah, you can. If you want to trade sport, you can do. It's very difficult. In fact, I'd love to have a go at it now. Now I know what I know about supply and demand and crowd mentality. But it's all maths at the end of the day. Most of the people trading on Betfair are actually bookmakers now, making books, so they can't lose. A bit like a casino edge, but the edge is tiny. You make a lot more money out of this than you will out of that. But yeah, it's interesting. If the team playing home wins, you go long, and if they lose, you go short on the position trading EA. 10% strategy. Do it. The odds are 50-50. You've got just as much chance of that working as anything else. But yeah. I used to trade on horses, greyhounds, tennis. Tennis is the best thing in the world to trade. Tennis. If you want to trade tennis, it's brilliant. Because the odds on a tennis match change so much during the match. Yeah. So the odds are whatever they are at the beginning. And as somebody gets a break in tennis, i.e. they go one game ahead and they break the other person's serve, the odds instantly change. When they break back, they change back again. Yeah. And then if somebody breaks again, it changes again. And the spread just gets bigger and wider. And literally every time there is a break in serve, you make money. So if you have a tennis match where someone just does straight sets, you lose. But if there is ever a break, you win. Tennis turned out to be one of the most amazing sports to trade. Because obviously Betfair is live odds. The odds change by the second. You know, someone is running from one end of the pitch to the other end of the pitch. The odds are changing because they're getting close to the goal. And then the odds drop again as they come back to the middle. If the game is push and pull, and no goals in the first half, the second half, the odds will be slower. Yeah. If it's a high scoring match in the first half, the odds will completely widen in the second half. Yeah. It's the most amazing thing. Bet Angel, it's called. If you want to get into a rabbit hole that you won't get out of for months, go and have a look at it. Otherwise, stay here. You won't make money doing it. It's hard. Well, it's very hard. But it's a really interesting thing because you get to watch sport and you get to gamble and you get to trade. Good. Kind of ticks all those boxes. But you can also get into some serious losses with it. So careful. MQL is what you code with. Look at, if you want to know about programming, go and look it up on the MQL website. I'm not going to go into programming talk. Bore the hell out of everybody. Right, I'll be back on Monday. So Monday is a no news day, so it'll be 8 o'clock Monday morning. I'm probably going to follow exactly the same lives, to be honest, as I did this week. I'm probably going to keep these lives the same now. So 8 o'clock Monday morning, afternoon New York session, Wednesday morning London session, afternoon session Thursday, and a morning session on Friday, because it keeps everything nice and easy. Bet Angel has a DOM, yeah. Yeah. It's ladder trading. It's exactly the same as futures. But there's I'm not going to go into it in detail. Go and have a look at the website if you're interested in it. But it's a very versatile piece of software. Betfair is just a trading market. You are betting against other people. Yeah, it's exactly the same as this. Yeah, when this candlestick goes down, it means there was more people looking to sell than there was looking to buy. Yeah, in sport, if there's more people looking for Scotland to win than Germany, the price will do that on Germany. And if there's more people looking for Germany to win, the price will do that on Germany. Yeah, it's a marketplace. But the difference between Betfair and a bookmaker is Betfair, you are betting with other people. It's an exchange. Trading exchange, yeah? Chicago Mercantile Exchange is where you trade futures. Betfair Exchange is where you trade sports bets. It's the same, exactly the same concept. Supply, demand. Yeah? Load of people think that Scotland's going to win. All right, well, let's offer them a load of German. Yeah. Price will change, goes up the ladder. As more people bet on Germany winning, the odds, as more people bet on Germany winning, the odds will go down. As more people bet on Scotland winning, the odds will go up on Germany. Ticks. Exactly the same thing. Except within Betfair, you have got thousands and thousands of markets in football, in tennis, in golf, in greyhound racing, in horse racing. I mean, it's endless. You can bet on who's going to be the next prime minister, whether Donald Trump will get abused in prison. You can bet on anything. Literally, if there's someone on Betfair that wants to bet on something, you can make a book against them. And therefore, you're trading. It's a very interesting concept. Rob Reinhold, head trader of Maverick Traded, started Flat Earth Trading Society on YouTube to prove that following set rules entry doesn't matter, only exit and trade management. Yeah, exactly. That's what I've been saying all along. You hear me say it in here every week, don't you? It doesn't matter how you get in to the market. What matters is how you get out and what you do after that trade. If you press the button here to go long, the button could be pressed because of the RSI, the stochastic, because your cat farted, because the wind's changed direction, or because you just went, oh, sugar rush, meant to hit sell and I hit buy. Doesn't matter why you did that. What matters is what the market now does and what you do after the market has made its decision. If it goes up, whether you get out here, 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 or here will make an impact on your P&L. When the market goes against you, whether you decide to exit 100% of the position, 50% of the position, 30% of the position, none of the position, and add another long to dollar cost average into it, that is what affects your P&L. Why you press a button has nothing to do with making money at all. Never has done. Flip a coin. University of somewhere, don't know where it is, they've published a study on flipping a coin in trading. They made money flipping a coin because the odds are binary. When you flip a coin, after a period of time, it will either have gone up or down. Yeah, you have no control over that. You have no control over that. The only thing the market does is it moves through time and it moves up and down. It's binary. Yeah. If you get in because there's a reversal alert, short, well done. If it goes up after the reversal alert, what do you do next? That's the decision that makes you the money, not the reversal alert entering into the trade. Always has been. And the people that understand that concept are the ones that make money in this market. The ones that are running around trying to find the best indicator, the best EA, the best strategy are the ones that will literally be running around chasing their asses for the next 10, 15 years before they suddenly realize none of it works. You have to have a strategy. You have to have an edge. Yeah, my edge is bank movement. When the banks move in one direction, my edge is that I know they will do that. I have no idea when, I have no idea how far, but I do know that they will. That's my edge. Yeah, so I have a set of indicators that is designed to help me find a rough place where the banks may do this. And as you know, from my P&L, not right. Sometimes it's right, sometimes it's wrong. But that isn't why I make money all the time. I make money all the time because I have the ability with my edge to adjust my price and exit when I want to. And I know roughly where the banks are going to go because that's where they've been. But I don't know any more than that. And I have no control over price. But you've got to have a strategy. And I've traded strategies for 16 years now, and I know that 90% of them don't work in the form they are. But remove the stop loss from the strategy, and all of a sudden the strategy becomes profitable, because by default the market will go up and down and exit you in a profit at some point. That's how I developed position trading. But I didn't develop it. I developed it for me using my indicators, but the banks have been doing it for 200 years. People that identify that earlier are the ones that make more money in their careers. This is why most people give up trading, because they don't get the simple concept that you are literally flipping a coin, gambling on the direction of price, and you have absolutely no way on the planet of telling when something will happen or where it will go. Yeah. So you have a random entry, a random drawdown amount, and a random amount it will go into profit. There's 3 random elements, and somehow you've got to work out how to make money out of that. Everything that everybody sells you is trying to give you something that tells you when the market's going to do something, force the market to do something. It's a $7 trillion a day thing run by 10 major institutions. There's no indicator you can place on this chart that is ever going to help you in any way, shape, or form. Everything I've built that I use is a visual aid, but it doesn't make the market move. Yeah, when this thing gets up here, it comes down. Sometimes it doesn't. But this tells me that the times it does that, i.e. the RSI gets extended and comes down, is higher than 50%. It's an edge. The ADR indicator shows me an edge. When it gets to 175% of ADR, there's a 6% chance it will go further. That's an edge of 94%. No clue whether it'll work or not. And everyone says, but it keeps going above it. Yeah. Sorry, what's your point? But it goes above it. Yeah, I know it does. Of course it does. Look, 3% of the time it does that. 2% of the time it does that. You're telling me that I've got something that draws a percentage on the chart that tells you it's going to go above that. And you're telling me why is it going above it? Not thinking. Yeah, this is a totally random thing. Your job is to extract money from it. You're not going to get it right. You can't, because it's random. It's like asking somebody to predict the weather in 2 months' time, or whenever your birthday is, your next birthday. Predict the weather on it. Yeah? Impossible. Impossible. But you ask someone, will it rain or not on your birthday? Your odds are suddenly 50%. Holy crap. Now I've got a shot. But you ask somebody what the actual weather is going to be, temperature, participation, UV level, possible to predict all of those things. But will something go up or down? It's 50-50 shot. Real world, isn't it? Time to get the kettle on and watch some location. Good one. They were down my neck of the woods the other week. Afternoon, Eri. Morning, even. Goodbye. I'm just about to go. So back on Monday. Hopefully we get some Euro strength today. Doesn't look like it at the moment, but we'll see what happens. Other than that, I'll be back Monday. We'll have a look at how everything's going. Yeah, we'll see where next week takes us with interest rates. So have a good weekend. Anything you need, I'll be in Telegram or Discord. Other than that, I will see you guys next time.